Hello everyone, Sabelo speaking here. So in this video, I just want to teach you guys the easiest forex trading strategy that is good for beginners and even the intermediate people who are still, trying to learn the concept of knowing the forex market. They can still use it and make some money out of it. Okay, so I'm going to break it down for you on what to do in order to master this trading strategy. Okay, the first thing that you need to know is the direction of the market. You must know the next move of the market. Okay, so the only thing that I use to know the next move is the correlation numbers. Okay, so for example here I have the strong currencies, and I have the, inside the strong currencies I have the US dollar, the JPY, and the Swiss. This means if you are opening a graph right now, these currencies, they are supposed to go up. Okay, if you place a trade, we're going to be only placing a trade for a buy, not a sell. Okay, and this group here, these currencies are supposed to sell, right? Because they are weak based on the sentiment of the market. The sentiment of the market is when we analyze the data that is coming from the news, and we want to see which one is strong and which one is weak, and also which one is neutral, because sometimes if the news are not there, for example here we have the neutral group. If the news are not there, there are no news, there are no new news release and everything, the market is going to be flat. The market is going to be going up and down until the news comes, maybe for a buy, then you're gonna see a buy, or the news comes for a sell, then you're gonna see a sell. So you need to have something like this that is going to tell you that these currencies, they are flat, they are neutral. Okay, and these currencies currently they are weak, meaning that if you want to take a trade on AUD and GBP, like if you want to trade on maybe AUD JPY or AUD USD, then you must look for sales opportunities only. Okay, and even GBP here, GBP is sitting at -7, which is very bearish, so you must only look for sales. And here we must look for buys. Okay, so this is what you need to have in your strategies in order to make money. Like I can say this is the easiest way to trade, because it guides you on which direction the market is going to go to. Okay, so now we know the direction of, maybe we know that these currencies are supposed to go up. Then we must pair them with weak currencies. Okay, we must pair them with weak currencies. For example, here we can just pair US dollar and the Australian dollar, or we can pair the US dollar and the GBP, or we can pair maybe the Swiss and the AUD. But we cannot pair the currencies that are inside here together. Okay, we can't pair the US dollar against the JPY. We can't pair those, and I'm gonna tell you why we don't pair those. Okay, we don't pair them together. So if you pair these together, the market is going to give you a range. Okay, and if you pair the weak currencies together, the market is also gonna give you a range. And if you pair the neutral currencies, still the market is going to give you a range. Why this thing happens, guys? This thing happens because if the strength of the market is the same, the market cannot take any direction. For example, here I'm going to go maybe, okay, let's make an example of pairing the euro versus Canadian dollar. Let's go into the trading view platform here. We are going to type in euro Canadian dollar, and then we're gonna see, obviously I'm expecting a range. Okay, the market is not making, the market is making equal highs, equal lows, equal highs. The market is choppy. We cannot really identify a trend now. Okay, we cannot really identify a trend. And okay, let's make maybe an example of GBP versus the Australian dollar. Still, if these two currencies are weak, I'm expecting a range. We can't expect maybe a continuation of a break, or you know we can't expect that. So let's go into the trading view just to see if we pair these two, what are the results. Okay, GBP AUD. All right. So currently, okay, previously the market has been trending to the upside. Previously, because the sentiment of the market was not, these two were not in the same group. But now both the GBP and the AUD are neutral, are weak. So that's why we see a fight here. The market currently here is not making a clear direction. You cannot really say whether the market is buying or the market is selling. But previously, I was looking for buys. I was looking for buys because the GBP at that time it was buying, and then the Australian dollar at that time it was selling. So if you mix a strong currency with a weak currency, that's when you're gonna find a trade. That's when you're gonna see a trend. Even here we've been looking for sales, because the GBP at that point it was selling. The strength of GBP, the market was losing value. And at the same time the AUD was gaining strength. That's why we saw the market shifting to the downside. But currently here, the market is not giving us something nice. So let's make the example of pairing a strong currency with another strong currency. Okay, let's go. Maybe let's make an example of the US dollar and JPY. Obviously, I'm expecting something like this because, if both currencies are strong, then the market is not going to give us a clear direction. Okay, let's see. JPY. So knowing this information is going to make you avoid taking trades that are going to range. Okay, so as you can see, guys, the market is currently ranging. The market is making equal highs and equal lows. Even here the market was bouncing at the same spot. So you cannot really say this is a buy or this is a sell, but the market is ranging, unless if you want to trade within a range, maybe taking buys, taking sells here, taking sells here, taking buys here. Then you can use, you can pair a strong currency with another strong currency. Then obviously you're gonna find a range, and then you can trade a range. But if you want to trade a trend, you cannot pair those two currencies. Okay, so now I'm going to make an example of pairing strong currencies with weak currencies. So obviously here we are going to find a trend, and then we follow the trend, because the sentiment of the market is telling us here to buy and here to sell. So let's pair maybe USD versus the GBP, the most popular one. GBP USD. Obviously, I'm expecting a clear trend. GBP USD. Okay. As you can see, guys, the market has been trending nicely to the downside. Although I didn't get a perfect setup for a sell, but I knew that the direction is going to go down. I knew that the market is supposed to go down because of these numbers, brilliant numbers. Okay, maybe let's make the last example. Maybe let's pair maybe Okay, let's pair a strong group with a neutral group. So you can pair these two. There's a possibility of getting a trend if you pair, the market that is flat with the strong ones. Then you can get a trend, because the flat ones, they will remain flat, but if the strong one comes, the neutral one is going to respect the trend of the strong one. Okay, same thing with this one here. You can pair the weak currency with a neutral currency, then you'll find a trend, obviously. So let's pair maybe the U, or maybe let's use the JPY versus the euro. Okay, euro versus JPY, euro versus JPY. Okay, JPY, and let's see. Obviously, the market is trending to the downside, nicely to the downside. And I'm still looking for a sell. I was still looking for a sell yesterday. But now, since the market has come to this strong support, then I'll be expecting a breakout followed by a retest. Then I'll be selling somewhere around there. So that's the number one thing that you need to do in order for you to make money nicely with no fear of losing. That's the first thing that you must have. You must have the strength meter, or you must have correlation numbers. Okay, these numbers are the numbers that I always post in my Telegram channel for my students for free, because my students, they already paid for the course. I cannot charge them for these numbers, so I post them on daily basis. As you can see, that was the 8th of September, 9th, 10th, 12th. I don't post them on weekends because the market is not moving on weekends. Okay, I post them consistently, every day. Let me just say that every day on my Telegram channel. So that's the number one thing that you must have. Okay, number two, you must know how to mark your key zones. Okay, your support and your resistance zones. So I'm going to teach you on how to do that. The first thing that you need to do is to go into the higher time frame, which is the daily. Okay, it's higher than the previous ones that we've been using, and we must mark the clear touches that we see. Okay, let me just remove everything, then I'll draw them for you. Then we have this touch here. Let's mark it. Okay, maybe let's change the color to this one here, and then we have a touch here, and then we also have the previous touches here. We also have the previous touch here. So this is what I see in front of me. This is what I see. I also see the previous touch here. Okay, so this is what I see on the daily. Then now you have to come to the H4 time frame, and then also we are going to mark the support and resistance zones that we see on the H4. Okay, I think we are now sorted. These are support and resistance zones that you must have. Okay, the clear ones that are visible on the daily and H4. And then now we know that, okay, the market here is supposed to give us a trend, right? So I'm going to because now the market cannot just, it's going to take time to break here. So let's talk about the previous trades that I took here and also here. Okay, let's talk about those previous trades. So after we've been identifying clear key zones support zones and resistance zones. Now we know that the market is also shifting to the downside, and the correlation numbers were telling us to look for sales. Okay, were telling us to look for sales. Okay, we can even go back, maybe let's check, because I took a trade here on the 10th of September, and then I held until my TP was hit. So let's go back to the 10th of September. So I'm expecting on the 10th of September, I'm expecting to see the euro being weak and the JPY being strong, or the one supposed to be neutral. But I'm expecting the other one to be aggressively moving into a certain direction. So let's go back into the 10th of September. Okay, 10th of September. Okay, this is the 10th of September. The euro, as you can see, guys, the euro on that day, okay, let's change the color to black. The euro on that day was bearish with -5. You know, -5 is a big number for us to sell. -5 is a big number for us to sell. And then the JPY was flat, you know, meaning that there was no clear direction. And then obviously we must expect a downtrend if we are pairing as a weak currency with a neutral one. Okay, we knew based on the sentiment of the market that the market is telling us to sell. That was number one. Number two, we come now to the H1 now. I mean to the H4 to see that the previous trend, you know, this previous trend has now broken. The previous trend, you know, the market has been trending up, but with this big candle, we saw a shift. The market shifted to the downside, and then it made a pullback. And also the market was also telling us to look for sales based on these numbers. Okay, so that was multiple confluences telling me to look for sales. Okay, then now we need to come to the H1. On the H1, we mark the smaller time frame support and resistance, and we are going to change the color to orange, and we are going to mark this thing like this. So that was the previous structure. Okay, let's zoom it out. So we saw the market breaking here, breaking the previous trend, breaking the moving average here. You know, we were clearly selling, and we were waiting for a pullback that is going to be in line with the high of the day and look for a continuation. So that's number three. Now we know that the high time frame trend is also telling us to look for a sell based on the correlation numbers. Number two, the structure, the previous structure, which is the support, has broken. The previous trend has broken, meaning that now we are only looking for shorts. Okay, but we cannot just sell here. We must get the market to give us, you know, a pullback towards these previous support. If that is lining up with the highest point of the day, maybe, you know, the market is switching time frame. I mean, it's switching trading sessions, like maybe it's from New York to Asian session, or maybe it's from London session to New York, then we will be able to get our sniper entries. Okay, so now I waited for the market to give me a pullback towards to these previous support. Okay, and then I got the pullback, pulling back until we saw this the red candlesticks. And then now we need to come into the M15 just to see the rejections of the high of the day. Okay, we need to wait for rejections of the high of the day. So this high here was also lining up with the previous touches, you know, previous key zones. and we saw that this high is also rejecting in the same spot that we've been marking. Okay, and then once we see red candlesticks, red candlesticks that are breaking the previous ones, the red ones that are making something like an engulfing candlesticks, maybe something like this. You see this big one here, then we can start looking for sells. Okay, that when I took my entry, boom, stop loss above, and then first TP is supposed to be here. That's your first TP. Okay, that's your first TP. You can hold for the day and then close your trade. But if you know that these numbers are still telling us to look for sales, okay, previously the market was also giving us okay, let's go back to the 11th. Okay, 11. Okay, on the 11th the market was still selling and the JPY was still neutral. So that's good for us to look for a sell again, to hold our trades, Let's see what happened on the next day. Okay, let's do this indicator to see the next day. So on the next day we saw a consolidation, and then the market went up again. For day traders, this they should be out by that time. But for people who are holding, people who knows that the overall market is telling us to hold a sell, then your next TP is supposed to be something like this. That's your second TP, because now the market is coming to the support, big support here, small resistance, small support. Obviously, once the market comes here, then the market is going to bounce. And we saw a fake out, and then the market bounced to the upside and then made a continuation again. But this trade was a valid trade because of those reasons. Number one, we saw that based on these numbers, the market is telling us to look for a sell. Number two, we saw that the previous trend has been broken, and the previous resistance here, the market broken it, meaning that we are now looking for sells only. Once the market breaks the previous resistance, previous trend, then the market, you must know that the market is changing directions, especially if the market, maybe euro is maybe sitting at -5, or the JPY maybe is flat, maybe it's sitting at 0, or maybe the JPY is maybe +3 or +5 or +7, then you must know that this trend here, this new trend, is going to be is going to push much longer. It's going to push much longer. As you can see, that the market has been pushing until we reached this double bottom here. So even if the market reaches the double bottom here, as long as the numbers are telling us to look for sell, we can wait for a breakout. Wait for a breakout breaking this double bottom here, and then wait for a pullback that is going to pull him back to the zone, and then we can continue, look for a high of the day here, some rejections, everything that is telling us that the market is trying to reverse, then you can take a sell again. So that's it, guys, from me. If you enjoy watching my videos, please make sure that you like my videos, because there is a lot of videos that I'm going to release for the upcoming weeks. And make sure that you subscribe just to make sure that you don't miss each and every video that I post on YouTube. Yes, guys, I'm signing out.